Key performance indicators. Every manager needs to understand, number one, revenue growth rate. Why does 75% of fast-growing companies focus on their revenue growth rate? Because it's the heartbeat of business success. Revenue growth rate measures the change in your company's revenue over a specific period, typically a year. It's not just about how much you're making, but how quickly you're growing. So, how does it differ from profit growth rate? Simply put, revenue growth focuses on your total income from sales or services, while profit growth is all about the bottom line after expenses. Imagine you run a service-based business. Last year, you made $100,000. This year, you hit $120,000. Your revenue growth rate? A solid 20%. Why should small businesses care? Because understanding this metric helps you make informed decisions, set realistic goals, and attract investors. In summary, revenue growth rate is your compass. It shows you where you're headed compared to where you've been. Are you ready to master your business growth? Join us for short, sharp, and simple video courses that give you the street-smart business skills you need to succeed. Take control of your business's financial future. Click the link below and start now.